We are halfway through 2024, and the Atlanta real estate market definitely not disappointing this year, keeping us on our toes. We're going to break down what happened, and we have two big numbers that kind of surprise you. One of them is something we've never seen before. The other one is something that we haven't seen in about 8 years, and definitely is a sign of a slowing market. We'll talk about both of those, and more importantly, if you are buying or selling, a game plan for what you can expect and what you can do to maximize this market as we head towards the back half of 24. How we doing, everybody? This is Steve, real estate agent with the Malone Home Team, EXP, here in the North Atlanta area. We do this every month, so if you want to keep up with what's going on in the Metro Atlanta area as far as real estate goes, the goods and the bads, because we're going to shoot you straight. All right, we're not like the news where we're going to, if it bleeds, it leads. Okay, I've worked in TV news for a long time. That's the saying. That's how they run. They don't do that here. If it's bad, we'll tell you, and if it's good, we'll tell you. If you want to know the truth on what's going on in the Atlanta real estate market, be sure to like us and subscribe. You'll get updates as we head throughout the next couple of months, because things are definitely going to change in the real estate market. So, as promised, what are we going to do? First, we're going to look at the numbers of what happened. We're going to look back at what's happened over the last 6 months, where we are right now, because home prices is very interesting to watch. Months of supply, very interesting to watch. The number of closings that we've had, very interesting to watch. All those things we're going to break down. We're also going to break down mortgage rates, which is really the big driver of what's going on in the market today. Okay, we're going to take a look at the mortgage rates, what's driving them, what to expect for the rest of the year. And we're going to finish this out by talking about if you are buying, what you should do next. If you are selling, what you should do next. So we're going to go a little nerdy on the stats, so bear with me through that, but then we'll get you some action plans for what you can do if you're looking to get something done. Here we go. First half of the year is in the books. Let's talk about it. So let's break down the numbers of what's gone on over the first 6 months in the Metro Atlanta area, because it shows two really big numbers that are very important. One is a number showing that the market is extremely strong and getting stronger. Number two shows a market that is kind of starting to teeter a little bit and may actually start to slow down a whole lot. The two of those numbers combined, we'll see what that means for the rest of the year. First, let's show you what those numbers are. So these are the stats from the MLS. These are over the last 3 years. Right now, we're looking at the median sales price in the Atlanta area. We look at the median sales price last month, $409,900. So the median is the one that's right smack dab in the middle, right? To some people feel like that gives you the better idea of median is a better representation than average. Well, you look at median or average, both of them are record highs for June. So we've never in Atlanta seen prices on average or in the median this high as we saw last month. Prices continue to go up. Okay, so we're at the highest. We're a record high. Ding, ding, ding. So whenever you see those record high numbers, prices keep going up. It's just like when you see the Dow hit a record high or the NASDAQ hit a record high and whatever, and everybody takes credit for it. It just continues to go up. Sometimes it dips, but it goes up. Real estate's a lot quieter than that. It just keeps going up. So that's the thing that's never happened before. We've never seen numbers like this. That's the good news. The bad news is this is a number that is much different. Month supply. Month supply is 3.6 months. Now, what does that mean? We talk about it all the time. Do it real quick. If you did not add any more houses to the market, none, okay? No houses to the market. And what we did is we sold everything on the market at the speed at which we're selling it, just cleared it out. How long would it take to get rid of the houses? Right now we're sitting at 3.6 months. Okay, what does that mean? What we see is anything between 5 and 7 is a balanced market. It's not a buyer's market or a seller's market. Anything 3 to 5 months is a seller's market. Under 3 is a strong seller's market. Under 2 is like super crazy. And then if it's near 1, like it was back in 21 and 22, it's bananas, okay? Because that's what it was a couple of years ago. Right now it's at 3.6. We're going to go look at, I'm going to hit the max button, because that 3.6, you got to go all the way back. See, we had 3.4 in August of 19. That was pretty quiet. I remember that. Now you're getting back into 2017, got to 3.5, but you got to go all the way back to right in here, October of 2016. It's at 3.7, and then went to 3.5, then 3.1, and then we were on our way down. You got to go back to 2016, the last time we had this big of a number based on the month supply. So Is that indicative of the fact that things are going to get ready to crash? No, because when we were right here, we weren't crashing. But here's what we were doing. Let me go ahead. Let's look at the sales price while we're sitting here. Again, that's 2016, right? What happened from here? Just steady climb. You see these crazy climbs right here when we were 21 and 22. But back here, steady climb. That's what we were doing. Nice and smooth. It's kind of what we're going to see. Okay, so when you add the fact that home prices continue to go up, which they did back then, and the monthly supply is up, what does it mean? It means that we're still in a seller's market, but man, it is much, much less so than it's been in a very long time. If you're buying, this is a great opportunity. But let's look at the stats first, then we're going to talk about what it means for you going forward. Okay, so those are the two big stats I wanted to show. I also wanted to show you this, the closed sales. Okay, let's bring it back a little quieter. Look at the last 3 years. All right. For the month, they were down 67, 61. But what I want you to look at is over the last 6 months, because we're doing this beginning part of July. This is for January through June. Last 6 months, we had 39,726 closings in the Metro Atlanta area. You go back to last June, 41,290. So again, we're at 39,726, 41,290. Okay. What does that mean? That means we definitely have seen far fewer closings this year than we saw last year. Okay, we were hoping for a little bit of a bounce this year. Didn't happen because the interest rates are staying stubborn. So fewer homes being sold, but the home prices just keep going up because we do have a supply shortage. It's not as bad as it was, but it's still a seller's market. So keep that in mind. When everybody tells you like doomsday scenarios, okay, it's not where we are right now. Just kind of flat, okay? So those are the numbers I want you to keep in mind about that. What's been driving the market this year? It's been the interest rates, okay? Now, this is an interest rate. I go to Mortgage News Daily to get this. Keep in mind, this is, here, I'll come to where we are today, and then let's break it down. Mortgage News Daily, what it does is it gives you it's kind of like an average number, okay? There's some places you can get a higher, lower, whatever. Average number. Okay, so keep in mind, if you're going today, you're not going to get today's rate right down here, 6.99%. You may not get 6.99%. You may go lower based on how much you're putting down, product, your credit score, or you might be higher because of what you're putting down and the product and the credit score. This is middle of the road, or they're like the average-ish. Okay, but what it means is, as we watch this number, because this is a consistent number as far as like it being like what does it represent. So as we watch this, this is how the mortgage rates are flowing. Right now it's at 6.99. At the beginning of the year, we were way down at 6.61 right in here, right? Then we were thinking, because if you remember, we were like 8% way back in October. Man, that was awful. And that really shut the full market down. Then we had a big drop in December going all the way down into the mid sixes. And we're like, all right, here we go. And then we had the steady climb back to the mid sevens. And now we're on the way back down. So now we're on 7. Currently at 6.99. We're recording this 2 o'clock in the afternoon. It may come down a little bit more than that before the end of the day. So at 6.99, I mean, it's not much different than, low 7s, upper 6s. I mean, it's where it's been. It's where it's going to be. We're going to be slow going from here, okay? Let's take a look at what's kind of bringing it down, because there's definitely a trend to bring it down from the highs back in April, right? There's a trend to come down. And what happened on July 5th? So we were all still getting over our hot dog and hamburger hangover. That's what I was doing in my house. We were barbecuing like crazy. 4th of July, America, right? So what happened is then we get into July 5th, we get the June jobs report. June jobs report, big thing about the jobs report. 206,000 jobs were added, about where they expected. But this is the big one right here. There were 111,000 jobs of downward revisions for April and May, which took the 3-month average payroll gains down to 177. That's the slowest pace since January of 21. The job market is slowing down. That's bad economic news, and we say it all the time. Bad economic news is good for mortgage rates, okay? So the feds are trying to squeeze the economy a little bit to kind of slow things down, Okay, that's why the rates are so high. The Fed funds rate. Keep in mind, the Fed funds rate and mortgage rates are different. They work in tandem, but they're not driven together. Okay, but Fed funds rate is so high because they're trying to choke out the economy. Once the economy starts to really slow down, inflation gets under control, then those rates will be allowed to come down. And as those rates come down, it's a sign that the economy is starting to cool off a little bit. Mortgage rates are going to come down as those Fed funds rates come down. Okay, so this was a big deal. The fact that, because this is kind of the last of the pillars that has been so kind of stuck and been very ornery is the only word I can think of right now. I didn't have a lot of sleep last night. That's what happens when you have 7 kids. Anyway, it just stuck. All right. Finally, it looks like the unemployment rate ticking up to 4.1%. That's relaxing things. Now, tomorrow, we're recording this on Wednesday. On Thursday, I want you to watch the inflation report that comes out, the CPI report. That CPI report comes out a little bit cooler. The inflation is a little bit lower than expected. The interest rates are going to come down 6.9, 6.8% tomorrow. We'll see what happens, okay? But let's look forward, okay? Because the big question everybody's watching and wondering is, when are the Feds going to drop their rates? Now, keep in mind, again, when they drop their rates, it's going to have an effect on the economy, but them dropping their rates is them watching the economy and seeing where the trends are, okay? Because the mortgage rates are going to follow this trend. The Fed funds rate does not drive the economy, does not drive the mortgage rates. It does drive the economy a little bit, and that's what they're trying to do. They're trying to tweak it, but the Fed funds rate, as it goes down, mortgage rates are going to go down. So what's going to happen? What are you looking at? This is called the Fed Watch tool. If you go to Chicago Mercantile Exchange Group, there's a guy on YouTube I love, Dan Frio. Check him out. He's great if you love this rate stuff. He turned me on to this. So what this is right now we're at 525 to 550 basis points. That's where the Fed funds rate is right now. It's super duper high. When they go to meet on July 31st, which is 3 weeks from today, there's a 95% chance they're going to leave the rate at 525 to 550, 4.7% chance 500 to 525. What does that mean? It ain't going to happen this month, all right? You can put your money on that, all right? You're not going to get good odds, but you can put your money on that. You're not going to drop rates this month. But what happens on the 18th of September, a month and a half later? 500 to 525, 71.8%, okay? There's a 72% chance that they're going to drop the rates in September, okay? If we look at probabilities, compare. That's the one, compare. This gives you an idea of how it's trended over the last month. Over the last month, a month ago, there was a 45% chance they were going to drop the rates in September. A week ago was 68%. Yesterday was 70.18. Today it's 71.77%. Starting to come into an idea that they're going to drop the rates. What that's going to signal to everybody, including people who drive the mortgage rates, is the Feds feel like the economy is cooling down and we're going to start going the other direction. That's going to allow for the levers that control mortgage rates to ease up a little bit, and that could really start to bring stuff down. Now, keep in mind, all this stuff is baked into the cake. Everybody knows these numbers. So it's not going to surprise anybody. They're not going to go and drop the rates and everybody's going to freak out and say, oh my goodness, and it's going to change everything. It's baked into the cake. But I'm just giving you an idea of this is where everybody sees that the market is going, okay? So keep that in mind. As we go towards November, now you're looking at a 52% chance we're going to stay in this 500, 525 range. Maybe 32% chance that you get that second drop in November. But as we go to December, now it's a 48% chance. That's your best chance that we'll have the second drop in December, okay? So you have 2 rate drops from the Feds. That's going to hopefully mean a decent number for interest rates. Look right now at what the mortgage rate projections are from Fannie Mae, MBA, NAR, and then the average of all 3. Okay, this just came in earlier this month. Q3, everybody's expecting to be 6.8 to 6.9, maybe 6.7, 6.6 at the end of Q4. Maybe we get down in Q2 of next year, 6.5. That's a big difference from where everybody was thinking at the beginning part of the year, myself included. I was really hoping for interest rates getting down comfortably in the 5s. As we look at everything, and you look at what's happened historically and where we are with the economy right now, I don't see any levers that's going to bring the mortgage rates down appreciably lower than 6. Now, if you've got to make a move, You got to stomach it. You got to get an interest rate around 6. That's what you got to do. But if you're waiting for 3% or 4% to make a move, I'm telling you, it's going to be a very, very long haul. I'm not saying it's never going to happen again, but it's going to be a long haul. There's no levers out there. There's no signs out there that show us that 3% is on the way. That's probably within the next 5 years. It's not going to happen outside of something major catastrophe happening. I mean, what happened with COVID changed the landscape of everything. Right? That kind of came on like that. Landscape changed like that. It can happen again. Look at everything else right now. There's really nothing on the table. So the thing I want you to look at, in agreement with that, we had the two price drops. We're going back to that CME tool. We have the two price drops, 48% chance in December to have a second drop, and then you have a third drop when we get into January, fourth drop when you get into March, and maybe another drop once you get into June. That's that slow and steady decline of the rates. That's going to allow for mortgage rates to have that slow and steady decline. But like you just heard, more than likely the bottom of mortgage rates is going to be upper 5s, low 6s. It's kind of where I'm thinking. So, we're telling all of our people, I want you to factor in, grab something now because the prices are going up. So grab something now before the prices go up, and then refi when the rates go down. But don't plan on a refi the rates being at 4%. That because it's not going to happen, not anytime soon. I want you to factor in getting a house at 7 and maybe getting a refi at 6. And if you can stomach that, grab the house. Okay, but home prices are going up. What we're going to do now, let's talk directly to buyers and sellers. If you're buying or if you're selling, this is what I want you to do for the rest of the year. This is the times that make the most sense to buy or sell and what you need to do. Let's talk about buyers first, okay? If you are buying, what should you do, okay? We talk about it all the time. There's 3 months where it's a really good opportunity to get a deal as a buyer. July, August, December. July and August, we're already seeing it. It's July 10th that we're recording this. We're already seeing it slow down because people have already found their house. Coming into the new school year, they've already found the house. We're starting to see things slow down a little bit, okay? So if you're a buyer, it's going to be less competition. You can get a decent deal right now. So if you're looking to buy, July, August, great times because of that. So now we get to Labor Day, people are back to school. They're back in the rhythm. Kids are going to, band. They're going to football. They're going to ballet. Gymnastics, whatever, like all the stuff. And it's just crazy through August. Everybody's kind of back in the flow by the time we get to Labor Day, right? So then Labor Day, things pick up for the fall market. Then you get into December. Now everything happens in December. You got Christmas parties, holiday parties. You got, recitals. You got, you got to go shopping. You got vacations. You got to go to the doctor's office. You got all that crap happens in December, right? So for that reason, buyers are sidelined or they're doing other stuff. Go swing in and get a deal. We've had people do that my whole career. Let's go in December and go find a deal. So keep that in mind. Those are the best 3 opportunities. But if you want to buy at any time, what are you worried about? You're worried about interest rates, right? Interest rates right now, as of this recording, upper 6s, low 7s. They're going to slowly come down. That's the plan. Again, I don't have letters behind my name, so I'm not guaranteeing anything. But they're forecast to go down. But they're forecast to not really go down that far. Maybe close to 6. So if you're not buying right now because you're waiting for rates to get to 3%, you're going to be waiting a long time, okay? Grab the house now because as we showed you, home prices are going up, okay? The other thing is, with fewer buyers in the market, this is your opportunity to go out and get a deal. Again, you're not going to get something $100,000 under asking price, but I mean, we just had something. We had some of our folks that just sold their house. We bought a house that was on the market. We got it for $20,000 under the original asking price. We got some concessions after doing the inspection. There's wiggle room, in the negotiations. Yeah, did I get it $100,000 under asking price? No, it's not that market, okay? But we got concessions. That's where we want to be. This is your opportunity. Because the thing I want you to remember is, as the interest rate goes down, okay, there's an economist that talked about this, Mr. Barry Habib. He talked about, he's one of the more famous mortgage guys in the country, and economists in the country, and he talked about how for every 1% that the rates go down, okay, 5 million buyers jump back in across the country. So 1%, 5 billion, or 5 million, I should say, 5 million buyers jump back in, okay? So if you go from 7% to 6%, guess how many people come back in the market? And now you're competing with them. Obviously, they're not right here in Atlanta. If they are, give me a shout out. I'll help 5 million you buy a house. Let's do it. But the thing to keep in mind is more people are coming. That's going to push prices even higher. Grab the house because prices are going up. Grab the house now. Refi down the road. Don't stretch it too much because you're not going to be able to refi crazy. But that's my plan if I'm buying. Again, if I want to get the best deal possible, July, August, December, but really these 6 months are going to be pretty good. And you're going to get a little bit of relief mortgage rate wise, and then the opportunity to refi maybe in a year to 2 years. Again, you're not going to refi at 3, maybe refi in the upper 5s, maybe. We'll see how it plays out. That's if you're buying. If you're selling your house, you're saying, Steve, what you just said that they could beat me up and take the money and whatever, Here's the thing I want you to remember what sellers are doing right now, okay? Because when you go online, you're going to see a lot of people with price drops, okay? They're not pricing their houses right. There are a lot of sellers who still think that it's 2021, in the middle of a pandemic, a bunch of people, whatever. They want to get the most out of the house. I can't blame them, but they're going too high on the price, okay? There aren't as many buyers. This is still a market where if you're in the right spot, the house looks great and it's priced right, you're going to get multiple offers, okay? You're still in that market. But we're not in the market where you get 60 offers no matter what. That's not this market. If you go high, the buyers know, okay? So if you're looking to sell, fall's a great time. If you're looking to sell, you can sell your house any of these 6 months. The exact opposite of what I said. Your best chance to get the best economic opportunity to sell, list it right after Labor Day, September, October, November. Get in and get out before Thanksgiving. Get under contract before Thanksgiving. That's the plan. But can you sell July through December? Absolutely. We just got to mind our P's and Q's. What are we talking about? You got to stage it. The house has got to look the part. Okay, it's got to be cleaned. It's got to be staged. We got to clear it out. I got videos on that. I'll share some of them below. Okay, how to get your house ready to sell. Okay, so you got to get your house ready to sell, number one. Number two, we got to price it right. Look, I know people are going to push back and say, "Oh, if you're a really good real estate agent, you could sell my house for $50,000 more and not be a chicken and sell it for less and blah blah blah." That's nice. Okay, we've been in this for 7 years. Okay, we know what we're doing. If the house is worth $400,000, it's going to sell for $400,000. Maybe $410,000 if we can dance it up and do get it great, but we're not going to sell for $450,000. It's kind of the market that we're in where people are like, well, let's give it a try. It's not time to give it a try right now. Okay, now are the mortgage rates where they are? Is there going to be more wiggle room? Is there going to be more opportunity to maybe push that number once we get into spring? Absolutely. Okay, so if you don't have to sell and you want to kind of wait and kind of see what happens, maybe spring makes the more sense. If you need to get it done now, though, can you sell it? Absolutely 100%. We're going to rock and roll for you. But the thing I want you to keep in mind, though, is we're not going to push price. Okay, we want to get it priced right. And the other thing is we want to be accessible. Okay, we want to open it up, have people come in, do open houses. We'll do our part pushing it on social media and on the internet and do like targeted advertising campaigns, things like that. We're going to rock and roll and get the house out in front of as many people as possible. Okay, so that's the thing. And we just have to be ready, and I tell my people all the time, you just have to be ready to give a little bit, okay? I don't want you giving $50,000 away, okay? That's not what we're going to talk about. But, like, if the house is worth $400,000 and you say, damn it, I'm going to sell it for $425,000, I'm not giving anything after the inspection, that's a tough place to be. We don't have a whole lot of hand in this negotiation. But if it's worth $400,000 and we sing and dance, make it pretty and get $400,000, or we get listed at $400,000, we get maybe some offers. Maybe somebody goes to $405,000 and $410,000, and then we kind of keep those people behaving themselves because they know there's other offers behind them. And we just had that. We had somebody in Sewanee, listing price was $550,000. We could have pushed a little bit, but I said $550,000 is kind of where we're supposed to be. Let's go right at it. And we did big open house. We did the marketing plan, whatever, and we had like 10 offers. 3 of them way over, and we finalized at $580,000. We just sold it. We finalized at $580,000, and the house was $550,000, right? Which is great, but we wouldn't have. And having that $580,000 there, having all the other offers held that person in check. You know what I mean? It kept them from kind of asking for the moon in inspections. And we gave them a little bit, but they didn't ask for the moon. They asked for $20,000. They knew they couldn't. They asked for a couple of things. We fixed it, and that was fine. That's where you want to be. You want to get the most money possible, but you also want to have the best deal possible. And part of that is having the most offers on the table, picking the best offer, and letting all the other offers scare that offer into behaving themselves. Okay? So, if you're selling your house, best chance September, October, November, but you can do it in the next 6 months. We just got to mind our P's and Q's. Again, I put some videos down below. Take a look at those, and we'll talk about it. Let's wrap this up. So whether you're buying or selling, there's opportunity for you. Okay, yes, if you're selling, this is not 2021, okay, where you could just get 500 offers for everything. But if you're buying, this is not 2007 when there were 75,000 houses for everybody, and you could get it for 100,000 under asking price, okay? This is regular real estate. That's the thing that people don't want to talk about. This is regular real estate. This is what happens, right down the middle, okay? Kind of a seller's market, but not crazy. They're going to get a good price. Buyers are going to buy. They're going to get a decent price, but not crazy. This is just how it works. We're going to have inspections, going to have appraisals, have all that stuff, okay? That's how it works. That's where we are, okay? Again, it's not bad. It's a good thing. It's a healthy thing. Things are going to change, though, as this mortgage rates come down. As mortgage rates come down and more buyers flood the market, things are definitely going to change next year if everything goes according to plan. It was supposed to happen this year, but it didn't. But we're not going to talk about that. It's going to happen next year. Let's see what happens. If you have questions, contact info is below as far as an email. There's also contact information below if you want to get a look at what your home is worth. If you're not in our system, check that out. I may reach out to you. I'm not going to drive you crazy, I promise. But it's a good way to find out with the HomeBot report how much your house is worth. And if you have questions, call me 470-233-4409. This is what we do. We help our people. End of 2024, it's going to be interesting. We got a little bit of craziness going on with the election right now. It might get crazy over the next month, so we'll see what happens. But as far as real estate goes, real estate is definitely slower, but it's still strong. And it's exactly where it's supposed to be. Okay, it's still a good thing to buy, still a good thing to sell, and we'll help you for both. Don't forget to like us and subscribe us. If you made it this far, you're awesome. Steve, we'll talk to you. Bye.